This week on the agenda, big taxes, big changes. What does the latest UK budget say about the state of the British economy and its standing on the world stage? The UK economy has been in the spotlight this week as Finance Minister, or Chancellor of the Exchequer, as she's known in Britain, Rachel Reeves, delivered the annual budget, with her Labour Party languishing in the polls in spite of their landslide election victory 18 months ago, and with sluggish growth and a real cost of living crisis. The pressure was really on. And not everyone is happy as she announced measures which mean British citizens will now face the highest tax take ever. So what does this say about the economics and politics of the UK and its standing on the world stage? With me now are Vicky Pryce, Chief Economic Advisor at the Centre for Economics and Business Research, Iain Begg, Professorial Research Fellow at the European Institute, London School of Economics and Political Science, and Chris Southworth, Secretary-General of the International Chamber of Commerce. Great to have all of you on the agenda. Vicky, let me start with you, because the mood music around this latest budget was particularly gloomy. How tough did the Chancellor really have it this time round?
Well, the truth is that just a few weeks or even a couple of months before, there were all sorts of hints that Rachel Reeves, our Chancellor, was going to have to raise quite a lot of taxes in order to fill a gap that seemed to be getting bigger in the government finances. So there were all sorts of hints in relation to the types of measures that could be used to plug this hole that was developing. And those measures could well include increasing income tax. There was a lot of concern about whether that would break the manifesto commitments. In fact, there was almost an announcement by her that there would be such an increase, only for that to then, in the last 10 days, be reversed. And now we ended up actually with a series of smaller measures because actually the fiscal situation turned out not to be as bad as had been feared. And so it was bad before. It looked like it's now slightly better. Now the question, of course, for everyone looking at the budget and the measures is whether some of the expectations for the future are now based in reality, or whether they themselves may come under scrutiny in the future.
Iain, what do you think? I mean, yes, it was a very leaky budget, but I'm thinking about forecasts and outlooks. The IMF, the OECD, they haven't had glowing reports on the state of the UK's finances. Their economic outlooks have deteriorated. And of course, the UK's own Office for Budgetary Responsibilities numbers weren't very sunny either, were they?
Yeah, so I would not have liked to be in Rachel Reeves' shoes in composing this budget, because the fiscal arithmetic was difficult. The UK has a relatively high public debt as a share of GDP. That debt has to be serviced, which is costly, and the debt service the UK pays is higher than comparable countries elsewhere, like France, which has an even worse budget position, but is under the wing, shall we say, of the European Central Bank, which means that it pays a lower interest rate than the UK has to pay to finance its debt. Rachel Reeves was also tied in by politics. Her party is restive. Her party wants her to spend more on things that Labour parties ought to spend money on, like welfare benefits. But she didn't want to make the cuts in welfare that were proposed over the last year. So she's hemmed in by that as well. In short, her room for manoeuvre, both politically, economically, and also fiscally, was very limited.
It was never going to be easy then, was it, Chris? What do you make of what's been announced?
Well, from our perspective, I mean, the obvious omission, or just generally a lack of focus on growth. We can't grow the economy if we don't trade more. Trade is 60% of the economy, and there wasn't a single mention of trade at all. So that was the immediate takeaway. And I think there were some good examples of what I would say are poor choices, where we're choosing to tax SME entrepreneurs, small businesses and consumers when we have clear opportunities to drive growth and unlock far bigger economic numbers. So there's a lack of ambition comes through time and time again with these Treasury statements, and there doesn't seem to be a recognition of the urgency of the problem. the numbers just simply don't add up. We talk about 0.1% growth. We've been flatlining for 10 years around that figure. Goods trade is zero growth. We've got 13,000 companies no longer trading with the EU. We've got £22 billion of trade finance gap, finance that's available, but in the system, but not available to the small companies who need it to trade. And then we've got 8 million people out of work as well. So the urgency is immediate. I totally understand the political reality, but we absolutely must be focused on trade if we're going to grow the economy.
Vicky, would you agree with that? Lack of ambition, not enough urgency? I mean, what other options really were there for the Chancellor?
The interesting thing, just touching on trade, is that we have seen a revision, and that was the problem that she was facing, a revision of the productivity expectations of the Office for Budget Responsibility that you mentioned, which looks at forecasts and looks at what impact perhaps some of the fiscal policies may have on growth. They have looked further back and looked at the impact of Brexit, the impact of whatever's been happening since the financial crisis, and they have identified that actually the UK is having a longer productivity problem than just that which has been caused perhaps by COVID and the recent energy price increases and so on that we've seen since the war in Ukraine, and the fact that actually electricity is very costly in the UK and affects decisions to invest and so on. But they have gone back to that, and trade does play a big role in this. So I do agree with Chris that this is a big issue, and Brexit has been mentioned a few times by the Chancellor as well and others as a cause for this. But what it unfortunately means is that you've got to work very hard to make up for that weakening in productivity growth, and it gives also a bit of a headache for the Chancellor in terms of getting the revenues that she needs. She got a little bit of luck in all this because, as you probably know, what we've got in the UK is we've frozen the tax thresholds. It means that many more people now paying tax at various rates, including at the higher rate than was the case before. So she's collecting quite a bit from that. But that, of course, is at the expense of growth to a considerable extent, because those higher wages that people are now getting paid affect willingness of firms to employ them. So there is an issue when you look at where the growth may come from in the future in the UK.
But as you were saying before, Iain, you can't really just focus on trade and the economics because of the politics of all of this. I mean, I'm thinking about a year ago in Rachel Reeves' first budget, that included a large tax rise, an increase in public borrowing, and it was meant to be one and done. It really isn't, is it?
No, it isn't, and that's because, as Chris said, the economy has been flatlining, not just over the last 18 months, but over a long period. And when the economy flatlines, that crucial figure, GDP, which is the denominator of the debt to GDP ratio, isn't growing. So the fixed amount of debt compared to a fixed amount of GDP doesn't improve. You need it to be improving to be on a dynamically successful path. Instead, what seems to have happened over several years, it's not exclusively the Rachel Reeves' fault, is that things have been getting worse. The debt to GDP ratio has been deteriorating since the global financial crisis, which started in 2007. It became worse during the 2010s. It became worse still during the pandemic. And unless you get that going in the other direction, that ratio going down, which you can do one of two ways, grow GDP or reduce the debt, things are not going to improve easily. There's also a wider question about how you motivate or try to stimulate growth in the UK economy. We've heard a lot over the last 18 months about changing planning rules. Has it happened? No. We heard a lot about infrastructure. Have new things been built? No. So unless that gets moving, the dynamic that you need to make the changes I'm talking about simply are not going to happen.
Chris, you mentioned before that so many thousands of companies have been affected by Brexit. And of course, in previous budgets, national insurance has been a huge talking point. What are the ramifications of this budget on businesses, on Britain's trading status?
Well, if I can just give you a really practical example of a choice. These are choices that are being made by Treasury and the Chancellor. So they had a choice for growth or tax. What they actually decided to do, this is in the context of trade, is to remove the exemptions on customs duties on small parcels. That's a bit technical. Basically, it means that anybody getting small parcels is now going to be paying tax. That's going to raise 500 million. That's why the Treasury did it. They had the alternate choice of accelerating the digitalisation and modernisation of the trading system, which would have generated 25 billion in trade growth, 224 billion in efficiency savings, and enable companies to reduce risk and costs, build confidence, and build a more resilient economy. That was a choice. The second is growth. The first is tax. And what we got yesterday was tax, not growth. So that's just a really practical example. What does this mean in terms of ramifications for UK trading status? The UK is still a massive global trading economy. It's a G7 economy. It's a go-to country for many of the emerging economies. It's well placed to trade internationally. What we are just not doing is leveraging our strengths and really driving reform in order to unlock growth at the pace and scale that we should be doing, and leveraging the strengths that the UK has. So the budget did nothing for any of that in terms of the trade context. And that, of course, constrains growth. It reduces consumer confidence in the domestic sense. And in the international sense, it just puts a big question mark on the UK whether it is as dynamic as it should be and doing what it should be on the international stage, because we definitely have that global position.
So what you're saying is the UK isn't growing in a meaningful way, and the budget didn't do enough to address that. So Vicky, where is the growth going to come from?
I think the hope of the Chancellor is that by freezing some of the measures in the budget, which froze some aspects of normal consumer spending, such as rail fares, which have been frozen now as of this coming year for the first time in 30 years. And by doing something about reducing household energy bills, this is all part of the measures that she has announced, and also fixing things like prescription charges, which are not going to be going up. They're also been frozen. There may be a possibility of accelerating this slowness in inflation that she hopes she's going to get. And in fact, the Office of Budget Responsibility did calculate that those measures perhaps would be reducing inflation next year by 0.4%, so 0.4%. That, of course, is quite significant, given that we are above the target of 2% at present, and the Bank of England is looking to possibly reduce interest rates in December. What I think she hopes is that they might now reduce interest rates faster, and perhaps not just in December, but early in the new year, and that is going to give a boost to growth. I think if you look at the individual measures in the budget, otherwise, they don't pass the test of really contributing to growth. And the Office of Budget Responsibility has made that clear. So I think she's relying on getting interest rates coming down, helping the consumer, helping businesses, and also, of course, lowering the yields that she has to pay when the government borrows in the capital markets. So that is, I think, where a lot of the, if you like, optimism that she's trying to portray in terms of where the growth figures might go in the future lie.
It's hard to be optimistic, though, when the government seems to be so unpopular. I mean, Iain, it's just, there's a disconnect, really, isn't there? I mean, they had this, the Labour Party had this landslide victory just 18 months ago. Now they're way behind in the polls, behind right-wing reform.
Well, yes, they are, but I think we need always to take polls with a bit of a pinch of salt, because what's going to make the difference is what happens over the next two and a half years when Labour starts to position itself again for the next election, which is, after all, not till 2029. I think the way I'd look at it, to complement what Vicky just said, is that, if you'll allow me this metaphor, it's a budget of small bites. It's full of small initiatives. A mansion tax, which is going to raise hundreds of millions, if it actually proceeds, which I think it might well not, because it's likely to get squeezed. It's got a small change in the cost of living, because consumers will no longer have to pay the energy levy that's raised energy prices. All these small things may be good, may be desirable insofar as they help individuals or help companies, just do not add up to the big strategic change this economy needs. And in the absence of a big strategic change, you're not going to get markets, consumers, business investors, all of those you rely on to make the difference, to make the sorts of big changes in turn that they need to do to transform the economy. So I have to say that I'm rather pessimistic about this. Some of it is self-inflicted. Some of it is Rachel Reeves' inheritance. Some of it is no doubt attributable to the way Brexit has been managed. But we're beyond trying to make excuses for it. What we need to do now is think, how do we get out of it in a much more strategic manner than has been portrayed up to now?
Chris, do you think the British electorate is ready to accept all of this? Or can we expect a public backlash, like we've seen in France, like we've seen in Germany, over quite similar pensions reform ideas?
Yeah, well, the UK is certainly not alone. The US is obviously another one on that list.
Yeah.
We're all dealing with similar issues. These are long-term inequalities that have been building up, lack of investment in infrastructure, child poverty increasing, cost of living now increasing, the tax burden now the highest it's ever been, young people not being able to buy their homes, public services not working. I mean, it's just a long shopping list of issues that need to be addressed. People are angry and they're frustrated. And that's why they're going to other parties, if the polls are to be believed. But there are positive stories here which are just not getting through into the media. The government is not doing a good job of telling them. The solutions are in front of us. I've already mentioned trade. There is a terrific amount of benefit that has already been illustrated, but we're not leveraging it and not scaling it. But can we transform trade? 100%. We don't need more agreements. We don't need any more free trade agreements. We don't need to change our EU relationship. We just need to get on and improve that trading environment and bring it into the 21st century. It's got nothing to do with trade agreements. The other area where there's a really positive story is around local economic growth. You've got cities like Manchester, Newcastle. I was in the Thames Valley recently. There's a whole swathe of regional economies that are booming right now, which is great. It's exactly what we should see. Hundreds of millions of dollars and pounds in investment, house building going on, businesses arriving, jobs being created. But that story is just not coming through. And that's a reason why. The reason for it, sorry, if I can say it like that, is more devolution. Some of the mayors are doing a terrific job, but it's not at scale. Exactly the same problem with trade. We've got solutions in front of us. It's just not at scale. So we're lacking that sense of courage and ambition to scale what is working, what is growing in the economy. And then you get the answers to some of Iain's points just earlier on.
Chris mentioned the figure of 8 million unemployed. Now, you might think that's not correct because the unemployment statistics say nothing like that. And the reason is that there's so many people who have withdrawn from the labour force, what we call economically inactive. I think an urgent priority for the government ought to be to reinstate the sort of welfare to work policies that were a key feature of the previous Labour government, the new Labour government led by Tony Blair and with Gordon Brown putting forward these policies. Without that, you don't have a basis for moving upwards, a springboard for greater economic activity.
But all of this is taking place against a really complex economic backdrop globally. Across Europe and the developed world, governments are facing brutal pressures from higher interest rates to climate change and ageing populations. Britain's fiscal problems, they're not unique, are they, Vicky? But I'm wondering, perhaps they need unique solutions.
No, you're absolutely right. They're not unique at all. Now, we've seen what's happening in Europe too. I mean, in a number of countries, I think as Iain was suggesting at the very beginning, we have higher debt to GDP ratios. So countries have borrowed more even than the UK, possibly, in some cases. And of course, in a number of countries, we've seen them still trying to recover from the Eurozone crisis itself. So the fact that our real disposable incomes are only, just getting back and won't be getting back actually until the end of this decade to where we were in 2009 is repeated just before the financial crisis, or at the height of the financial crisis, just before that, is repeated in lots of other countries in Europe. I mean, we've seen that in Italy and elsewhere. And we've also got countries like Germany not growing at all. So although, yes, we have had quite a slowdown in the last few months, what you've seen is that overall we may still be growing by 1.5% this year. When you look at Germany, the likelihood is, if they're lucky, they may get 0.3%. You get Italy at 0.4%. So you're not in an environment where all these countries are growing so fast and we are an outlier growing very slowly. That is not the case. And in many ways, it has made our life easier in terms of dealing with the fiscal deficit we've got. You see the problems that France is having right now in terms of constraining its own deficit. So yes, you're absolutely right. This is not a unique problem. But you're also right to say that we should be thinking of a unique way of dealing with our problem. And our problem has become worse because we've actually moved out of having the proper trade relationship that we had before, on which we actually depended. Seeing a reduction in our trade intensity is pretty bad for growth, pretty bad for productivity, and we need to reverse that in all sorts of ways. Yes, Chris has all sorts of ideas, but actually I do think that getting into a regulatory agreement with Europe is going to be very significant. Lots of other trade deals have been signed, but they're not actually adding huge amount to GDP. So everything is absolutely essential. And having said that, a positive thing that this government has been doing is borrowing to invest, and the investment figures are quite significant that are coming in. The important thing for them, of course, is to get the private sector to also invest alongside, and the incentives that they give to it. And we have to watch those incentives, perhaps that do not become a bit perverse, but what we do nevertheless need is the confidence to build up that indeed there is a future for this country, and therefore companies need to invest in those areas.
Chris, I can't help but wonder where US tariffs might fit into all of this. The UK's Office for Budgetary Responsibility said there's still significant uncertainty about the future direction of US and global trade policy, something that you were alluding to earlier on. Can UK companies and the UK economy really find any way to insulate themselves from that uncertainty?
Absolutely. Businesses are adapting either way. The US is not the same as it was in the past, and that's really important. It's only 13% of global trade. There's 87% of global trade is everybody else in the world where there are no tariff wars or disputes in that sense. There's plenty of opportunities out there. We're just not leveraging the opportunities from the UK point of view. And companies are already de-risking. We're seeing plenty of evidence of that. Global buyers, 35% of global buyers have already shifted operations out of the US. 50% of commodities traders have done exactly the same, and they're doing it to de-risk their supply chains. It's not that companies won't trade with the US. What they're doing is they're spreading their risk and moving into other markets where those commodities or products are equally available at less cost. And then importantly, companies are restructuring their corporate finance teams and treasury teams to manage down that FX risk, foreign exchange risk, and interest rate risk. And the answer to all of this is digital transformation. The more data-driven you are, the faster you can move in real time. Nobody wants their money trapped in supply chains. They want to get their goods in, their products in and out of markets, their finance in and out of markets in a way that we've never been able to do before. And digital transformation is absolutely the answer, and all the evidence proves that. So that's what companies are doing. They're just adapting to the reality. Are we exposed to the US? Of course we are. We have a big relationship economically with the US, as do other markets, but plenty of other parts of the world are just getting on with it, and we need to be really focused on that 87%. That's absolutely priority. I've just come back from South Africa at B20, and these markets are growing far faster than we are. We're just not present. We're not there at the scale that we should be, let alone other regions like Latin America. There's lots of growth opportunities out there. We just need to grab it, and we need to be ready for it, and we need to be more resilient. And that's where the budget let us down, is companies know what the solution is to be reducing risk and cost and being more resilient. But economically, as a country, we're not helping. Because we should be investing in that digital infrastructure to enable every company to be more resilient and fit for purpose for 21st century trade. So it's not just about being resilient, it's about being fit for purpose for the future and in line with where everybody else in the world is going.
Can I just add quickly that this has definitely increased uncertainty for businesses in the UK, but also elsewhere. We still have quite a lot of negotiating to do in a number of sectors, whether it's the pharmaceuticals, steel, and also cars up to a point. And we have different tariffs that have been given to different countries or agreed with different countries and regions. We have different agreement with the US than what the EU does, and that complicates issues. But there is no doubt that, as Chris was saying, that companies adapted, and what they did, and one of the reasons why world trade didn't fall in 2025, but actually rose, but a lot less than had been anticipated, but at least it rose through the year, is because companies started selling to the US before those tariffs became effective. And that happened from everyone, whether it was from the EU or China, whether it was from the UK, into the US to try and avoid those tariffs. But it's one of the reasons for the sort of relative slump we've seen since, that obviously if you do an awful lot in the first half of the year, then you sort of slow down and maybe catch your breath and think of how can we insulate ourselves from all this in the future, as Chris was suggesting.
Iain, how far does this budget go to improve, or conversely to worsen, Britain's standing on the international stage?
I think the answer to your question is it's largely tangential to Britain's standing on the international stage. What would enhance our position would be if the economy started to grow, became more influential, was able to dictate rather than receive. Just think of the relationship with Europe. We are takers now from Europe. They tell us what's happening and we have to take it. Whereas had we still been in the EU, we might well have been shaping rather than taking. The budget doesn't alter all that much. That's why I described it earlier as a small bites budget. There is no great strategic thinking in it that I can see being transformative. So I'm afraid I have a rather uninspired answer to your question.
Chris, how about you? As uninspired, or perhaps some glimmer of hope?
Well, I think the budget was just disappointing. It neither improved it nor worsened it in terms of our international standing. I would agree with much of what Iain's just said. But the fundamentals of the UK are always strong. We're a global finance hub, we're a global trade hub, we're a global legal hub. We have deep international relations internationally. What we're lacking is in ambition. We're not leveraging the strengths and the resources that we have fully. But there is a huge market out there, to the points being made earlier. We're not the only country in this situation, and there is an enormous demand and a market for solutions. And the UK should be leading that argument and putting forward, by example, how to drive ourselves out of the situation that we're in, from low growth to high growth. But we can't do that with the budgets that we had. We have to be far more ambitious. We have to really stretch our wings and leverage our strengths and get back to what we used to be really good at, which is being much more innovative, much more reform-led.
Chris Southworth, Vicky Pryce, Iain Begg, thank you very much.
Thank you.
You can watch every episode of The Agenda in full on CGTN Europe's YouTube channel. And for exclusive extra content from me, my guests and the rest of the team, don't forget to check out @The Agenda Show on TikTok.
Coming up on a future agenda, a changing America. Is the US entering an era of post-elite politics? And what does that mean for the rest of the world? But for now, from me, Juliet, Mann, and from all the Agenda team here in London, goodbye.